What's going on, guys? Welcome back to another video here. So as you can see by the title, we are going to be doing a part 2 of the most profitable TradingView indicator for 2023. The response from you guys after we released these traffic lights has been absolutely insane. Seeing you guys using this indicator to honestly change your lives has been one of the most amazing things that I've been able to witness over the last month or so here. And I do want to give a special thank you to all of you guys who have been watching the videos, tuning into the live streams, and a special shout out to everybody that's been a part of our platform and our community from the very beginning. Guys, a year ago, I didn't think that we would be in this position here, really helping you guys change your lives. And it's one of the most amazing things to really hear your gains, what you guys have been able to do with them, and just the overall success that you guys have been able to have in the market, especially from those of you that had never traded an option before. So before we get into all of that, guys, if you wouldn't mind dropping a like on this video, dropping a comment down below, and subscribing if you do want to see more videos like this. So in this one, we're going to be going over the 4-hour in the daily, and we're going to talk a little bit about swing trading here. If you want to learn a little bit more about the shorter time frames for day trading with these traffic lights, make sure you go watch Review Dork's video on this. He just posted it, and it's an absolute gem. So let's get into it right here, guys, and take a look quickly at these traffic light indicators and these alerts that we've recently rolled out to you guys. So first things first, again, remember, please don't go searching on TradingView, Webull, or anything, traffic light indicator. We built this, guys. It's proprietary. The only place to get it is on our platform. But lucky for you guys, we are offering everybody a free 2-week trial right now where you can come, honestly, download the chart, take it, and leave if you really want to. Again, you're not going to get the full insight into exactly how to use them, but if you're that type of person, go for it. The link is down in the description. Everybody has access for 2 weeks completely free. Now, what we're looking at here is the broken traffic light, and these are the traffic light alerts on the daily time frame. So I know I've gotten a lot of questions about this. People are a little bit confused as to why they don't update throughout the day. The reason for that is we're trying to make sure that we're confirming that a traffic light actually exists, because I know a lot of you guys, even though we try to front run a lot of our things that we've already given you guys then decide to go do your own thing and try to front run. So we try to make it as foolproof and idiot proof as possible. So that's why you're not seeing them throughout the day. And again, if you're getting them the next day, as you can see a little bit later in this video, these trades can take a significant period of time to play out. So one day is really not going to change a whole lot. Now, the second thing here, the red light runner, these are the traffic light alerts on the 4-hour time frame. We're going to be going over risk management, position sizing, and exactly how to trade both of these daily and 4-hour time frames in this video here. So let's actually pull up Tesla, because this is a really good example, especially Tesla's price action over the last about 8 months, of how powerful these traffic lights can actually be and how effectively it can manage its risk, or as Gabe likes to say, they're self-corrective. So let's bring out the ruler tool right here. And as you guys can see, if you enter this traffic light here and ride it up to the top, as we can see, that's about a 48% gain just in shares. Imagine what that would have been like for options. Now, when we go back to this one over here, let's actually pull this up. You get this on the next candle all the way down here, 62% drop in Tesla shares. Even this one right here is not too bad. You actually get a nice little, let's see, 6-7% gain in shares. But what I want to focus in on with you guys here is this range. Now, when you see traffic light, you are seeing consolidation and a little bit of chop. But the best thing about these is you are able to keep your risk small. And when the traffic lights invalidate themselves and you see one going in the other direction, you are not down very much on your position, and you're able to preserve your capital, come in and hit these nasty trades as I have shown you guys right here. So again, at this point, everybody knows how powerful these traffic light indicators are. They're spreading like wildfire, and all thousands of you guys that are using these are having a lot of success, which is, again, awesome to see, guys. So let's actually go over how to use these position sizing, risk management, expiration dates if you were to see one of these traffic lights on the daily time frame. So when we're looking at the daily, there's a couple of things that we need to keep in mind, and let's actually talk a little bit about risk management first. There's a couple of things that you can do. The first thing that I want to talk about is, we've said this a couple of times and people are still confused on this, is sizing for zero. Now, when we talk about, let's just use this example here, a 10% portfolio allocation, and we're using a 10% stop loss, we are risking 1% of our account in any given trade. Now, I want you guys to make sure that you're predefining your risk before you enter enter the trade because it makes trading a lot less scary. And one of the best ways to do that is quote unquote size for zero. So using that 10% example, so 10% portfolio allocation with a 10% stop loss, risking 1% of your account, you could then go in with just 1% of your account on the trade and size it for zero, meaning you're fine if it expires worthless at any given time. Now, that's something to keep in mind. Some of you guys are not going to have the portfolio sizes to be able to do this on stocks like Tesla. But as we get into the 4 hour here, you will be able to do that if that is something that you want to do. And that's going to become a little bit more clear when we talk about expiration dates for the 4 hour. But let's talk about expiration dates for the daily here and exactly why we want to get these expiration dates or the time to expiration that we do. So for the daily here, as you can see by this most recent Tesla move, or the second most recent Tesla move to the downside, this move really started at the end of September, Monday, September 26th, and bottomed, let's say here, Friday, January 6th. So that's about, let's say, October, November, December, and a little bit into January. So let's just call that 3 months, 3.5 months of time. Okay. Now, if you were to have gotten contracts on the daily time frame that expire about 2 months out, let's see here. So end of September, basically going into the end of November here. Let's see where that puts us. End of November would be right here. So you've got a really, really nice trade here coming to the downside, but you missed the drop from 198 all the way down to 100. So one of the reasons why we like to get more time than we could potentially need on the daily is to make sure that we can fully capitalize on the entirety of the move. The second is, since we are swing trading when we're trading on the daily, meaning holding contracts overnight, you can see a lot of volatility on these daily candles. And I don't want that to scare you guys because you can see your positions fluctuate up and down a lot. So when you get more time on your contracts, you're going to have a little bit less theta decay. Remember, theta or time decay is going to really ramp up in the last 30 days until the contracts expire. So you're effectively making sure that you can fully capitalize on the whole move, and you're lessening the volatility of the position that you have. Again, we treat all of these time frames the same. If we're looking at the daily, I treat it the same as the 1 minute. I do the same type of analysis. Now, again, ideally, you're going to be wanting to get contracts to keep this as safe as possible at the money or just slightly out of the money. If you can afford in the money contracts, that is awesome. Good for you. For those of you guys that have smaller accounts, you might want to stick with the 4 hour or make sure that you're trading stocks that you can afford. Again, guys, do not over leverage yourself or over risk in this market, because if it happens one time and it goes in your favor, you're going to think that that is going to be the norm, and you're going to continually make those mistakes where you oversize, take a big loss, oversize, take a big loss, and that's not what I want for you guys. So just to kind of wrap it up here on the daily time frame, you want to get at the money contracts that expire about 2 to 4 months out. You want to get a minimum of about 2 months. 4 or 5 months to expiration is really going to lessen that volatility and make sure that if there's going to be this long drawn out move, you're going to be there to benefit from all of that price action. Now, again, obviously, we're going to be using the concepts of 1348, the stop loss strategy, risk management, and everything like that. And those videos are linked in this description as well. Now, what I also want to go over with you guys in this video here is the 4 hour time frame, because I think a lot of you guys have been curious about this. It's really fun to trade. It's a little bit more risky. So those of you guys that do have smaller accounts, again, you're going to want to pick stocks that are a little bit cheaper, and you might want to consider sizing for zero. But again, you have to manage your own risk at the end of the day. I can't babysit you and go into your accounts and make sure that you're not doing anything stupid. That's going to be up to you to do. So let's actually switch Tesla to the 4 hour time frame here. And as you guys can see, again, the traffic lights are really awesome when you catch this solid move. And the risk is very small when the move is going to self-correct itself. Again, the traffic lights are awesome. Now, when we're thinking about risk management with the 4 hour, when we think about sizing for zero, well, we're going to need to be able to get contracts that are a little bit cheaper. Now, in order to do this, since these moves on the 4 hour are coming from a little bit of a shorter time frame from the daily, it's going to be okay to get contracts with a little bit less time to expiration. At bare minimum, I would say 2 to 3 weeks to expiration, bare minimum. And you can go as far out as a month and a half, 2 months, 2.5 months out. Now, again, I'm not getting contracts that expire in 2 weeks. The closest that I will get them is 3 weeks. But if you're sizing for zero and you're trading with less than 1% of your account, remember the sliding scale of risk that we talk about all the time. I don't see a big problem with that. But again, it's going to be a lot safer. And I hope you guys understand it's all about safety in the market. It's not the worst thing in the world to do that as long as you manage your risk appropriately. Best practice though, minimum 3 weeks out. I would say go all the way out, maybe a month and a half to 2.5 months out too. So again, you can fully capitalize on the entirety of that move. Now that we've kind of gone over a little bit with the 4 hour, a little bit with the daily, with expiration dates and what you're exactly looking for on some of these timeframes, there's two main things that you guys have to understand. And this is kind of what we're going to wrap this video up with. The first is going to be entries. Now, if for those of you guys that have been on this channel for a while trading with these traffic lights, this is going to be no new news to you, but if you see a very significant price move away from one of these EMAs here, the 13 EMA in blue, you're going to want to wait for a retest. You do not want to chase any moves regardless of what time frame you are on. It is always going to benefit you to wait for a retest and make sure that you are getting the best price possible. I want that to be clear to everybody. Do not go chasing these moves on the daily. If you see it already make a big move, like Tesla on this example here, yes, it could break this 214 high, but it is going to be best practice to wait for this retest and play the continuation back higher. Again, I don't want you guys to be disappointed if you miss this move to the upside because there are so many more of these traffic lights firing off every single day. We see it on the 1 minute all the time. We see it on the 3 minute. We see it on the 5. If you miss it, it's not the end of the world. Just wait for the next play. So the last thing that I want to talk about with you guys here too is risk management. Now, again, we did kind of talk about that with entries here and expiration dates and things of that nature, but when we're thinking about actually taking the loss, if you're sizing for zero, you don't have to do much. And remember, that's trading with less than 1% of your account. Now, if you're going in with a little bit of a larger amount of your portfolio, maybe at the 5% range or the 2.5%, maybe even if you go in with 10%, what are you actually looking for to invalidate the trade? Now, there's two things that we're looking for. We're either looking for a closing candle on the opposite side of the 13 EMA or another traffic light in the other direction. Now, that first statement about chasing those candles is going to make a whole lot more sense when we talk about this here. So currently, at the time that I'm recording this video, Tesla is trading at about, let's see, 212. Where's the 13 EMA on the 4 hour? 201. If you're getting contracts with not a whole lot of time to expiration and you see a closing candle about $13 or $14 lower than what the stock is currently trading at, you're going to be down significantly. The risk management at those points, or the actual amount of risk that's on the chart, is significant. Now, if you wait for the retest, let's say you're entering at 202 and you're looking for a closing candle on the opposite side of the 13, where you're really only risking $1. Now, again, what this also enables you to do is if you're entering on some of these retests here, is actually wait for the traffic light coming in the other direction as a shift of momentum. So that's what I like to do on the 1 minute. I apply that to the 4 hour and the daily as well. And again, guys, we are going to be making a lot more videos on these traffic lights here. If you do have any more questions, make sure you leave them down below in the comments. Remember, everybody gets 2 weeks absolutely free with the Trade 1348 platform. Make sure you guys check out that link down below. And again, hit that like on the way out. Subscribe if you want to see more videos like this. Other than that, guys, I hope you have a great rest of your day whenever you're watching this. Peace.